Okay, we're recording. Today is November 11th, 2022. That's a very special number, actually 11/11/2022. Today we're featuring Eric Moore, of course, and he's going to go over some more recent updates regarding Sears, other information, and more. All right, so without further ado, Eric, take it away.
Okay, thank you, Blair. Thank you. Okay, everybody, this is the update on Sears Holdings. Update on the Sears Holdings bankruptcy. On October the 29th, 2022, the plan of liquidation became effective. So we covered that in the last video. We covered the effective date of the plan. So the assets that are remaining from Sears Holdings that were not sold or liquidated were transferred to the liquidating trust. What I want everybody to do is to Google the purpose of a liquidating trust. And when you Google the purpose of a liquidating trust, what you're going to discover is that a liquidating trust is set up to distribute the remaining assets of a bankruptcy to the shareholders and bondholders. So the place we are in right now, ladies and gentlemen, is we are awaiting our distribution. When there is nothing left to pay out in a bankruptcy, they do not set up a liquidating trust to hold nothing. So the assets that will be distributed to us, and this is important because we're going to play a clip of Yahoo Finance talking about our exit from bankruptcy. So I'm going to tell you what's in the liquidating trust, and I'm going to tell you what's going to be distributed to us. Then we're going to play a mainstream media finance video, and I'm sure some of you have seen some of the articles that say we are limping or crawling out of bankruptcy with 15 retail stores and so on and so forth. I want everybody to remember there is no article that I have written going back to August 2016 where I mentioned that the retail stores, the brick and mortar retail stores, were dependent upon our success. We do not need brick and mortar retail stores to succeed. Number one, we have an online business that has been doing over or roughly $2 billion a year at 30% margins. We have Sears Home Services. We have over 1,100 pieces of unencumbered real estate. And unencumbered means no mortgages and no liens. Let me say that again. Unencumbered means no mortgages, no liens. We have over 5,000 acres of prime land and real estate in mall parking lots around the country. Places like North Point Mall in Alpharetta, Georgia. Places like Miami, Florida, where the Miami Heat just bought the property for over $25 million. Places like Times Square, where we have 2 stories of properties, prime in New York. Places like Long Island. Places like San Diego, California, Carlsbad, places where real estate is extremely valuable. We have been selling real estate since the bankruptcy. We've sold over $800 million worth of real estate since the bankruptcy. This is not zombie real estate. We have businesses such as Sears Home Services, which have done more than $1 billion a year. Let me say that again. More than $1 billion a year in the last 10 years. All this is documented in previous 8Ks, previous annual reports that you can look up on your own. We have a business called Service Live. We are the largest installation, repair, and delivery of large appliances business in the United States and in Canada. And I'm saying all these businesses, including Kenmore, including Craftsman by Sears, which is earning more than $30 million a year in royalties for us. If you go to Stanley Black & Decker's last 3 years of annual reports, you'll see they are paying us more than $30 million a year in royalties on new products. And we also can produce our own products royalty-free for 15 years. All this is in the Stanley Black & Decker annual reports. We have a credit card called Shop Your Way that is sponsored by Citi. It's making more than $300 million a year. I have not mentioned a retail store yet. We have Sears Home Services, Shop Your Way, Kenmore, Craftsman by Sears, and we have Die Hard. We have the use of Die Hard in everything except the car battery category, even though we sold it. We have the use of Craftsman, even though we sold it for $900 million prior to the bankruptcy. Craftsman by Sears pays us a royalty of over $30 million a year. Stanley Black & Decker is paying us a royalty because they bought Craftsman. We do not need large brick and mortar retail stores to make easily more than $1 billion a year. Our online business is grossing more than $2 billion a year, and this can be found in document 2352. Document 2352 in the bankruptcy discloses this. So the bankruptcy case discloses that the non-brick and mortar retail stores were earning more than $1 billion a year in profit prior to the bankruptcy and more now. We have an incredible opportunity with the bonds because the stock does not trade. But I want to show everybody a short clip that Blair is going to queue up. And I want you to pay very close attention to what they are talking about. If you look at my first article and you look at my last article on Seeking Alpha, you look at my 19 facts versus fiction document, I am never making the case that we need the retail stores, especially the large brick and mortar stores, to survive or have an incredible amount of income. The challenge with most people is they believe Sears Holdings, the holding company, is just Sears and Kmart retail. There are 8 to 10 highly successful debt-free businesses that are exiting, that have already exited bankruptcy. They are in the liquidating trust, and the cash from these businesses are there and waiting to be distributed to us. Sears Holdings is a holding company. A holding company owns businesses. So you can name your holding company after one of the businesses. Berkshire Hathaway is no longer a textile mill. Berkshire Hathaway has been a holding company since Warren Buffett took over in 1965. Most people believed in 65, 66, 67, 68, all the way until 1983 or 84, that they were still a, quote, dying textile mill. But they were a holding company that had other businesses that were highly profitable. So if you think that we only have Sears and Kmart retail, I understand if you think I'm crazy if I believe that Sears is worth anything. But Sears Holdings' other businesses are highly profitable, and they have been debt-free since March 17, 2020, when on the Transform Co website, which you can look up on your own, you look up the press release from March 2020, and Mr. Lampert made it clear that we were debt-free as of March 2020. He mentioned Sears Home Services, which has been around for 75 years. He talks about Die Hard, Kenmore, Service Live. He talks about the real estate. He talks about the real estate development. We don't need large brick and mortar retail stores to make an incredible amount of profit. So Blair is going to play you a clip from Yahoo Finance. It came out less than 3 days ago. And I want you to listen and see if you hear anything about the other businesses that I just mentioned, or if you just hear about, quote, the dying retail stores. So Blair's going to cue the clip up for you right now, and then we're going to finish the video. And before he cues it up really quickly, I want you to pay close attention to the gentleman that is doing the video. Pay close attention at how happy he is when he is talking about Eddie Lampert and what he thinks is the downfall of Mr. Lampert and ESL Investments and Sears Holdings. I'm ready when you are, Blair.
Yeah, can everybody see that all right?
Yes.
Yeah, I can see it.
Okay.
Sears has officially emerged from bankruptcy after more than 10,000 court filings, but not all of its stores are completely gone. The company did shrink from 700 stores to now just about a dozen, but they still live on around the country. It should be no surprise that that's where we find Saz's take today. Saz.
Brad, this story realistically isn't warranting of our greatness, but I'm going to cover it anyway because I covered Sears and their downfall very extensively. So yes, so after 10,000 court filings, Sears Holdings, the holding company that was created when they originally went into bankruptcy believe it was October 2018. That is what emerged from bankruptcy. And a couple finer points here in this story here. The holding company, as I mentioned, is in fact out of bankruptcy. That happened late last week. No, Sears is not going to be opening stores. That's not happening. You'll probably see more stories on the Sears emerging bankruptcy in the coming days. There's no more stores. It's barely a retailer. No, Kmart is not going to open stores. That is obviously not going to happen as well. So if you have your hopes for these things happening and a great return of a former great retailer, no go. And then lastly, there are about 20 Sears stores left open in the United States, believe it or not. And we have that list here. I think there's one in Anchorage, Alaska. Here's where some of those locations are. But by and large, these 20 locations are, in fact, they're going to close. I believe I just did a search online. The Anchorage location may already be closed. So there might be only 19 stores, Sears stores left open. Now, a lot of the Sears real estate is still out there. It is zombie real estate throughout the country. At some point, these might just be Amazon distribution centers, but for right now, it's just zombie real estate from a former retail icon. And I look at by me in Long Island, there are several former Sears locations, auto centers and Sears, and of course Kmart's that are staying vacant, and the locations are absolutely terrible. And there I am, what looks to be an Incredible Hulk here, walking into what?
No, that's not an Incredible Hulk.
Or a zombie.
That's a zombie.
Okay, that's a zombie walking
doing the Thriller dance.
Doing the Thriller dance, walking into a Sears store. I miss going to Sears. I miss covering the story. It's been, it was the highlight of my career covering their downfall, not the highlight of anybody, of course, working there, because it was absolutely dreadful. And I mentioned this in a Yahoo Finance piece in October 2018. That still remains my final piece on Sears. Really, Eddie Lampert, the money manager who combined these companies in 2005, will still go down as probably the worst CEO in the history of corporate America.
One of the last significant plays that even zombie size would know about that Sears was trying to make.
In?
Well, yeah, they are zooming in. That's a gradual zoom too, just to make it an emphasis point.
Wow.
Was the fact that Sears was really trying to sell some of the durable goods, was trying to sell everything from the dishwashers, the refrigerators, and things that don't have a high replenishment rate, which was a very markedly, if I may say, poor strategy. If you didn't have enough people, especially in a time in 2018, not everybody was going out and buying homes at the same clip that, not the same clip that they were in 2020, of course, obviously, when there was a more favorable environment rate side. But to have a durable goods play, or to have a play on something that does not have a high replenishment rate, screams deflationary for a company that was already just waiting in uncertainty as well.
Yeah, one of the biggest red flags for me when I was an analyst covering this, Brad, was walking to a Kmart store, and they had registers from 1987. I'll never forget these old school IBM registers. And this came at a time where the new beautiful Target opened down the street with self-checkout lanes. And you had to wonder, why is this happening at Kmart? And you have to go back to Eddie Lampert, never invested in the chain, couldn't care less.
I enjoyed Kmart personally,
really?
Growing up. Yeah,
we
we had a good Kmart in Westchester, Pennsylvania.
Can't talk about this right
for
now.
many years. It's an LA Fitness now, I believe.
Okay, thank you, Blair. So if you notice from looking at this clip, and you guys can redo this clip at any time, there was no discussion about Sears Home Services and the more than $1 billion a year that they're earning. And you can look this up, and I think it's document 2355-1. You can look up the earnings of Sears Home Services. No talk about Service Live. No talk about Kenmore and its revenue. No talk about Die Hard and their revenue. No talk about Craftsman by Sears, and you can look this up yourself in the Stanley Black & Decker annual report going back to 2018, 19, 20, and 21. We're earning more than $30 million a year in royalties from there. No talk about the prime real estate that's being redeveloped in Santa Monica, in Times Square, North Point Mall in Alpharetta, Georgia. Long Island, we have more than 10 acres of land. In Big Bear, California, in the mountains, more than 10 acres of land and a Sears store. We have more than 5 or 6 properties left in California, average value $20 a property. You can look at document 892 and look up the unencumbered property, and you can see every single piece of real estate that we had in the bankruptcy. Document 892, scroll through and you'll see 50, 60 pages of properties. I want you to look up the tax value of those properties that he called zombie properties. Just Google the city and the tax value. Google the amount of land that we have in those particular properties. More than 5,000 acres of land in prime real estate. Seritage, which is a spinoff of Sears Holdings, and Sears Holdings has been selling land on average at $2 million or more per acre. At 5,000 acres of land, that would be $10 billion. Let me say that again. At $2 million an acre, 5,000 acres would be $10 billion just for the land. Kenmore, very valuable brand. Number 2 in the United States, possibly number 3. Sold at Lowe's, sold at Costco's. So there is absolutely no truth to what he's talking about. What if we do close those other 15 stores? What does that have to do with the credit card revenue of over $300 million a year? Service Live, Sears Home Services, over $1 billion a year. What about Sears Reinsurance? What about the real estate we redeveloped? What about the cash from the liquidating stores? What about the cash from the sale of Innovel Solutions to Costco for $1 billion? What about the cash of $200 million from the sale of Die Hard? What about the $1.3 billion in cash that was contributed to the new company by Eddie Lampert? You can see that in document 2355-1. So we have an incredible opportunity, and it's very rare that we have this particular opportunity at Sears Holdings. We have an opportunity to buy bonds because the stock does not trade anymore, and the stock has been canceled and it's being replaced with a new stock symbol or the QSIP for the stock. We have not been canceled in the meaning of we've been wiped out. When you are wiped out, you do not get a QSIP number. You do not get a new stock symbol that says SHLDV. What you get is a notice from your broker. Good luck next time, write this off on your taxes. And that is not what happened. So what we are waiting on right now is for the liquidating trust to start making distributions. The effective date happened less than 8 or 9 days ago. Now, something very important happened at E-Trade, and something very important happened. The liquidating trust has a fiduciary duty to inform all the brokers, including the people at ComputerShare, and all of the stockholders and bondholders, especially the bondholders. They have to inform them that the bonds are no longer in default. When a bond is in default, they are not paying interest on it anymore, and or they don't know if they're able to pay the principal or both. And there are other things that can cause a bond to be in default. But when you file bankruptcy, your bonds are in default because during bankruptcy, which is called bankruptcy protection, you don't pay interest on bonds during that time. When you exit bankruptcy and you are going to be paid, they withdraw the notice of default because they are no longer in default, because the money to pay the bondholders, including the interest, has been transferred to the bond indenture trustee and or the liquidating trustee. So when they withdraw the notice of default, they have exited bankruptcy and they have the money to pay the bondholders. So what Blair's going to do is show you the notice that E-Trade sent out that I have in my possession when we exited bankruptcy roughly October 29th. This notice of default that I personally received is dated November 2nd, 2022. And if Blair could blow that up for me, I'll read you what it says. And these are the October 15, 2049 bonds, which were formerly the October 15, 2019 bonds. It says, Sears Holdings Corporation, 8% due, 12/15/2049, event, default notice withdrawn. It's time dated and stamped November 2nd, 2022, 10/20/27. What this means, ladies and gentlemen, is that the bonds that you can purchase today for roughly $10 are worth $1,000 plus interest. Let me say that again. What this notice means is that the bonds you can purchase today for $10 are worth $1,000 each. They do not send out a notice of a bond not being in default anymore, and they have withdrawn, meaning they pull back the notice of default. They only do this when money is in hand to pay the bonds. The QSIP number for these bonds, 812-350, A as in Apple, F as in Frank, 3 as in the number 3. Let me say it again. 812-350, A as in Adrian, F as in Frank, 3 as in the number 3. There is another video on this channel that explains to you the best way to purchase the bonds. It features Adrian. She's here on the call right now. So let me make sure I'm clear so people understand this opportunity that we have. For the people who are impatient, for the people who are waiting on the payout, for the people who are excited, for the people who don't know when we're going to get paid, you can buy a $1,000 winning lottery ticket called a Sears Holdings bond for $10. Why would you want the payout to happen quickly if you are able to buy $10? Excuse me, if you're able to buy something worth $1,000 for just $10. Now, I know a lot of us are ready to be paid. Most of us have been in this bankruptcy 1, 2, 3, 4 years. Some of us have been invested in Sears Holdings longer than that. But while you wait, why not trade off your $10 for something worth $1,000? When a default notice is withdrawn, the bonds are no longer in default and payment is pending. Do I know how fast the payment is going to come? No, I do not. But what I will encourage people to do is to call your broker and ask to speak to corporate actions. And you need to press them to look through the mail, because I promise you, if E-Trade has this notice, the other brokers have this notice. But they get notices from the bankruptcy of Sears Holdings for the last 4 years. And I assure you, since everybody believes Sears Holdings is broke, they throw the notices to the side and they don't even open them. They don't realize that these are important notices that their clients need to get. So if you're with SoFi, if you're with Morgan Stanley, if you're with Schwab, if you're with TD Ameritrade, if you're with Robinhood, whoever you're with, and I hope you're not with Robinhood, but whoever you're with, call them and ask to speak to corporate actions and tell them about this notice and ask them to go through the mail and find out if they've received it. I assure you they have received it. They just have not informed the other parties. So what you want to do in investing is you want to be as safe as possible. You want as little risk as possible. And the highest level of investing is investing in something that is already worth multiples of what you're paying. Let me say this again. Value investing is about investing, and the lowest risk value investing is about investing in something that is already worth multiples of what you're paying from on the day you pay. You make your money at purchase, not at sale. Let me say this again. You make your money at purchase, not at sale. When you're investing in a great, all-time great investment like Sears Holdings, if you are a trader, you are in the wrong place. If you are a trader, you're in the wrong place. You must understand the value of the company that you own stock in. When we are official and the payout announcement comes, you want to make sure you understand that you're not selling something for $100 that might be worth $500. There is no trading price for Sears Holdings right now. So what's it worth? Because it doesn't have a price does not mean it does not have value. But some things have price and don't have value. Beanie Babies had price in the 90s. Watch the movie, The Beanie Baby Bubble, on HBO Max or Amazon Prime, or get the book, The Great Beanie Baby Bubble. People were paying $30,000, $40,000, $50,000 for small stuffed animals. It had price, but no value and no utility. Sears Holdings is a company run and majority owned by a genius named Eddie Lampert. If you notice in the clip that I showed you, he said Eddie Lampert would go down in history as the worst CEO of all time. I'm going to put on the record right now that he'll go down in history as one of the greatest investors and CEOs of all time. The bankruptcy has been over for less than 7 days. And the only focus of the so-called mainstream financial media has been one division of a company with 10 to 12 divisions. The only focus has been the debt of that one division that was paid off in March 2020, not the other 10 entities that have no debt. They have not done follow-up. They have not looked at any of the 10,000 documents on the bankruptcy. They have not read the liquidating trust document. They've only, at best, read the settlement document. The settlement document is not the only asset that went into the liquidating trust. That was roughly $175 million. But here's another key, ladies and gentlemen. Eddie Lampert had a second lien appeal. He had a second lien appeal where he appealed his claim to the Second Circuit. His claim was roughly $718 million. In the settlement, which you guys can get the document numbers, it was around August 31st from the previous video. He gave his $718 million back to the other bondholders and other claim holders. So Blair is going to pull up a document. I'm going to prove this. What you need to focus on is what is an allowed claim. I went over in the previous video that the PBGC, the Pension Board Guarantee Company, they are a government entity. This particular government entity oversees pensions in the United States. They're owed roughly $880 million. They have not forego their claim. They have not given up on their claim, and they have not forgiven their claim. They are getting paid on a pro rata basis out of the same liquidating trust that the bondholders are getting paid out of. And you don't hold on to a claim of almost $1 billion and hope you're going to get paid. You only have that claim and that settlement when you know you're going to get paid. That money is in the liquidating trust, and it will be paid to them as well as to us and the other bondholders and the shareholders. So Blair is going to pull up a document, and I copied and pasted and made footnotes for everyone. This particular document is verbatim to the court record. I just put it on one sheet to make it easier for people to understand. This is document 3276, page 57. Again, this is document 3276, page 57. I call it the path to payment. This is how we get paid. For the people who say there's no money left, for the people who say that unsecured creditors will get zero, for the people on Seeking Alpha and Reddit who are upset that the stock symbol has changed and they will soon be proven inaccurate. This is what you need to look up. Document 3276, page 57. And I need you to look at what the general unsecured claim is under 1.76, which is right here on the document. And I want you to take a look at the general unsecured liquidating trust interest, which is 1.77. And here's what's key. I'm going to read off part of 1.78, general unsecured trust recovery. This means 91.05% of the net proceeds of the general assets. The general assets are collectively other causes of actions and other assets. You go down to the footnote, if Blair would scroll up, go down to the footnote, and what are other assets? Other assets are, it says, means all remaining assets of the debtors. So I named the other remaining assets. I named Sears Home Services. I named the cash from Innovel Solutions, which was $1 billion. I named Die Hard, the sale of that, $200 million. I named the $1.3 billion that was contributed back. I named the tax credits and tax refund of roughly $900 million or more. So there is cash to pay us. There are other businesses that we own. There's the revenue from Kenmore. That is what the net proceeds of the general assets are. But the net proceeds, if you look at the footnote, they're only talking about the cash. So we must have at least enough cash to pay all the bonds and that $880 million. If we didn't have enough cash to pay the PBGC their $880 million, or the roughly $700 million that the bondholders are owed, why did E-Trade send out a notice withdrawing the default? They cannot do this on their own. I was contacted by E-Trade, I contacted them, and they said, we received this notice from the company, and they told us to immediately inform everyone that the bonds are no longer in default, and they will be putting forth the payment. I do not know when yet, but I implore everybody to call corporate actions at E-Trade, Morgan Stanley, Schwab, TD Ameritrade, and SoFi. and do not let them tell you we don't have the notice. Say the notice has went out to other brokers. So are you saying to me that some brokers got it early and you guys got it late? Can you please double check to me and find out what's going on? Because Sears Holdings has exited bankruptcy, the plan is effective, and there is cash to pay to me. So back to document 3276, page 57. If unsecured creditors, here's a question for anybody online. If unsecured creditors are getting zero, why are we getting 91.05% as general unsecured trust recovery participants? If we're not a part of the liquidating trust beneficiaries, why did they give us 91%? Now, if you finish the rest of this paragraph, you'll see that the ESL 507B priority claims are first. Mr. Lampert gave those claims to us. So we are first in line on a pro rata basis with the PBGC, and you can see that when you read further on your own. So on a pro rata basis, we're splitting the remaining cash with the PBGC and with the bondholders, which is us and shareholders. The cash is available to pay to us. You can still buy a bond that is not in default for 1 cent on the dollar. I have never seen this on Wall Street. I've never read about a case like this, but the misinformation in places online, like Seeking Alpha, Reddit, and in the Yahoo Finance piece that I just played to you, we should celebrate that because it gives us this amazing opportunity. I've never seen a bond withdraw the default and it's still for sale for 1 cent on the dollar. Your opportunity is to continue to purchase the bonds. And this is not investment advice. I'm not a financial advisor, but me and the people I know are still purchasing these bonds because they're the cheapest. But all the bonds will be paid in full. Let me say this again. But why would you pay 10 cents on the dollar for a bond worth $1,000 when you can pay 1 cent on the dollar? So Adrian's done a great video on this same channel explaining to you how to purchase the bonds, but do your own research and invest at your own risk. But Sears Holdings is the best, safest investment I have ever seen, in my personal opinion. You are investing after the announcement of a payout. You are investing, you're paying pennies on the dollar for something worth its full price. Bonds are sold in $1,000 increments. So a $1,000 bond costing you $10 is going to pay out $1,000 plus interest. And as you can see, the bonds are no longer in default, but they are selling as if they are in default. The key thing to value investing is you're looking for mispricings like this. You get rich and wealthy looking for misunderstandings, mispricings, bad information, FUD, whatever you want to call it. You don't get rich when the crowd is invested in it. You get rich when you find a mispricing. So as a value investor, I'm looking for opportunities where I'm investing in something that is already worth multiples of what I'm paying. I'm not hoping on the future. I'm not praying for the future. I'm investing today in something already worth multiples of what I'm paying. Everything that comes after is just a bonus. That's what value investing is. And Sears Holdings, in my opinion, is the most misunderstood investment since Berkshire Hathaway. It's very misunderstood because most of you believe that Sears Holdings is just Sears and Kmart retail stores. Most of you don't know about the other businesses, even though they've been disclosed in the bankruptcy documents, they've been disclosed in the annual reports, they've been disclosed. But the focus is on how many retail stores and brick and mortar retail stores we have. There's been no conversation about the roughly $2 billion a year we've been making online. No conversation. So if you close all the retail stores of Macy's, does that mean the online business goes away? If you close all the retail stores of Kohl's, all the retail stores of Target, does that mean the online business goes away? How about our credit card, which can be used anywhere they take MasterCard? The credit card doesn't go away because the brick and mortar stores go away, because the credit card is Shop Your Way City. The credit card is a MasterCard. It can be used anywhere, not just Sears and Kmart retail stores. It's a MasterCard. The credit card is doing amazing. Kenmore is doing amazing. It's sold in Costco now. Die Hard is doing amazing. It's sold everywhere. Sears Home Services is the #1 appliance delivery and repair, home repair company in the US and Canada. That has nothing to do with brick and mortar retail. That business has been around 75 years. Go to Transform Holdco, transformco.com, and read the history of Sears Home Services. Go to the March 17, 2020 press release, and they'll tell you that our company has been debt-free since then. It's in the press release dated March 17, 2020. We sold Innovel Solutions for $1 billion. We sold Die Hard for $200 million. That money was not paid into the Sears Holdings bankruptcy. It was paid into Transform. So Transform has put all of that into the liquidating trust, and we are awaiting payment. I don't know how fast the payment will come, but I do know that the bankruptcy is over. And if you look up document 3276, page 57, and if you look further in the plan document, none of the assets in the liquidating trust revert back to the debtor. Look under the section that says reversion to the debtors. Nothing goes back to the debtors because Sears Holdings has dissolved. Go to document 1730, page 32. There is a distribution requirement. And that requirement is after the company dissolves by the end of the third taxable year, and we have already dissolved, ladies and gentlemen. The end of the third taxable year is upon us. The next requirement is we must be distributed the cash and the remaining businesses and assets. It is my thought and my speculation that we're going to merge with one of the other businesses, such as Lands End, Syracuse Grove Properties, possibly AutoNation, one of the other businesses that Eddie Lampert has a large interest in. That's my speculation. It is not a fact, but we must be public in order to receive public securities. If we were not going to be a public company, E-Trade would not have changed our stock symbol, and it would not be listed as a broker. Brokers don't sell private securities. Brokers sell public securities. And if you look up the quote by Eddie Lampert, and he says, if I was a betting man, I would bet that Sears Holdings will be public again. Look that quote up from 2018 or 19. Eddie Lampert said, if I'm a betting man, if I was a betting man, and I am, we'll be public again. So why would your broker change your stock symbol to a QSIP or SHLDV or SHLDQ-reorg if we weren't going to be public again? Brokers handle public securities. They don't handle private securities. So we're either going to IPO or merge with someone sometime soon. Anybody have any questions?
Hey, Eric, that was great. I do have a couple of questions.
Okay, go ahead. Go ahead.
You mentioned a new ticker for Sears, and that there are some different names like in people's accounts. Could you get a little bit more into what the new ticker names mean, like the V and the X's? It's unusual.
Okay, right. So I've been told, and if you look this up, you'll find that usually when a V ends up on the end of a stock symbol, a company is in transition, and sometimes it's a dividend about to be paid or a merger. It's a dividend or a merger. So I've seen some people, in some people's account, it's just the QSIP number for the stock. And some people's account, it says SHLDQ-reorg. And some people have something that says SHLDQ.old value. Some people have something that says SHLDQ value. Other people have something that says SHLD PRD value, and other people have SHLDV. But so different brokers use different symbols. But in a nutshell, if we were wiped out, and this is what a lot of people have been saying online, Adrian, if you're wiped out, they don't change the symbol. They simply tell you you're wiped out and you get a tax form. There is no change. You simply go all zeros. And if you look at your account, you'll see that the number of shares you had are still there. They're all zeros all the way across when you've been wiped out. And we're not wiped out because our assets and our cash are sitting in a liquidating trust, and we're waiting on them to be distributed to us.
Thank you. That makes sense. I have another question about the bonds. In terms of which bonds to buy and stuff. It can be a little confusing because some of them say that they mature in 2049 or this or that. What do you have to wait that long to get paid out when you're purchasing bonds?
No, absolutely not. If you look at document 3276, page 57, it says that the general unsecured trust recovery are going to get the net proceeds of the general assets, and that means all remaining assets of each debtor. And if you look up the definition of net proceeds in that document, document 3276, the definition of net proceeds means all cash proceeds of the debtors realized from the total assets. So that means cash payment. But what I'm hoping is that we get an option to convert to stock or cash, because of course we have a different tax situation with stock versus cash, but you do not have to wait to 2049. What they do is they change the date of the bond so that the expiration date is longer than the how do I explain it? So the original date of this bond was December 15th, 2019. So generally they don't trade bonds that have expired. So they simply extend the date so the bonds can still trade while the bankruptcy is going. So they might put any year, 2099, what have you. So they change the date so that the bond, they're not selling an expired bond, technically. So they just push the date back. But these bonds are no longer in default. And any bond you can get your hands on is worth $1,000, because who knows if these bonds are still going to be available tomorrow, next week. Any bond you can get your hands on for less than $1,000, you're doing great. And most of them are selling between 1 cent on the dollar and 10 cents on the dollar. And they are no longer in default, according to E-Trade and the notice I received. All right.
Thank you. I'll let others ask questions, and then I'll get back to you. Thank you.
Okay, go ahead, Blair.
Yeah, can you hear me? I have a question.
I can hear you good. Go ahead.
Okay, great. You mentioned a moment ago about the possible option to take stock, all stock, rather than, of course, to understand the payout would be either probably 60-40 or 50-50. So that process about getting all stock, two questions about it. One, will we be notified from, E-Trade, let's say, about that option, or is that something we got to request? That's the first question. And the other question is, what if that option is not available? What's the next best thing to do?
Well, if that option exists, you're going to be notified. You'll get an announcement from the company, and they'll say, hey, we owe you $1,200 for this bond. If you would like all cash, select this option. If you would, let your broker know. If you would like all stock or what have you, let your broker know. And you would contact E-Trade, or they would send you a form or something to that effect, and you would just check, I want all bonds or I want all stock, if that option exists. I'm not sure it will. The next best option is to take your cash and do some good with it, and take care of business. Because if they give you the cash, it'll be taxed at a liquidating dividend rate. And we'll have another video with the ladies that are CPAs and tax people that explain that. But if they pay you in cash, nothing wrong with that. You take the cash and find another great value investor and celebrate.
Absolutely. Okay, thank you very much. Great answer. Rod has his hand raised. Go ahead, Rod.
Hey, Eric, I've got a question. I pretty much know the answer, but I'm just kind of reiterate some of the questions that I'm seeing on StockWits and Reddit, and also on our YouTube channel.
Okay, thank you.
Can you just kind of review what the proof of publication, November 3rd, New York Times, what that means and how that works for people?
Okay, definitely. So I don't remember the document number right off, but there's a requirement that when a company makes an exit from bankruptcy, there's a requirement that the public actually knows about it. So in our plan document 3276, they were required to file on the court docket within 5 days that the plan had gone effective. And that means that everything in the plan, including the distributions we're going to receive, etc., it's an effective plan and is now official. They have to file on the court docket within 5 days, and they have to file in the New York Times, which is a national magazine, within 7 days. And they have done both on November the 3rd, they actually filed with the New York Times. And they filed with the court a couple of days ago a copy of the article in the New York Times and the posting to let people know the plan is effective. That way, people who are selling their bonds to us for 1 cent, 2 cents, 5 cents, and 10 cents on the dollar cannot say they did not know that we were getting 91% of the net proceeds of the general asset. If they can't later go back and sue and said I was unaware, because they've informed the court, they've informed the stockbrokers, and they put it in a national newspaper called the New York Times, and they've shown the court that they have done it. So they do this to make sure that there are people who own bonds, who own stock, who own claims, who are fully aware that the plan is effective, and they can go to the plan and figure out what the plan says. And the plan says we get 91.05% of the net proceeds of the general assets, and that means all remaining assets of each of the debtors. And there are multiple debtors. If Sears Holdings was just Sears, it would say debtor. If it was just Sears and Kmart, it would still say debtors, because that's plural. But we own at least 8 to 10 other businesses, free and clear, no debt, according to Mr. Lampert.
Thanks, Eric.
All right. Any more questions?
Adrian, you go right ahead with your question.
Go ahead,
please.
Adrian.
2 questions. One is, you mentioned a couple of times that it's 91.05% of the net proceeds. What happens to the other 8%, 8.9% or whatever?
The other 8% or so goes to what were considered other parts. It's in the document. They kind of break it down. So there were other entities that had intercompany debt. So maybe some of the Kmart stores may have owed Sears Reinsurance, something to that effect. So that other 8% or so is kind of worked out between those, or recoveries that come from other places. So whatever is left is there. So I simply focused on the 91% because the 8% wasn't individual bondholders or individual creditors or what have you. But if anything's left from that 8%, it goes to us. It goes to us as well.
Awesome. And last question is, why in the clip that you showed, it seemed like the reporter was really negative, obviously really negative on Eddie Lampert. And if he, as he indicated in the clip, is a person who has been following the Sears case for, I guess, however many years, 4 years, why is he only focusing on the brick and mortar stores? He literally called it a holding company, so he obviously is aware of the other businesses. Why is he skipping over those other businesses?
Well, that has been the challenge, Adrian. I don't know why they're skipping over. I don't know if it's intentional. And I don't know, I mean, they're supposed to be journalists in the finance arena. So if you're a journalist in the finance arena, if you just took a look at the first day filing, you'll see all the other businesses. If you take a look at any filing, every filing in the bankruptcy lists every one of the companies on the front page. So if you see the caption that says, in regard, Sears Holdings bankruptcy, if you look at the bottom of the page, all the other businesses are listed on every single filing. But for some reason, people only talk about the brick and mortar retail. I don't know why they do that. And I'll just give you a prime example. It seemed personal with this guy. He called Mr. Lampert the worst CEO of all time. He said he'd go down. Well, something interesting happened today. If you go to Yahoo Finance and look at the videos today, and today is November 11th, this same journalist covered a story on Sam Bankman-Fried, and he was the CEO of FTX. They filed bankruptcy today, and they are alleged to have misappropriated billions of dollars of people's cryptocurrencies, billions of dollars of people's cash, just all of these things. He said absolutely not one negative word about this guy. He's under investigation by the Department of Justice, the SEC, and the whole world. And he is the biggest story of the last 48 hours. This guy, Sam Bankman-Fried of FTX. They went bankrupt. When you see the clip on Yahoo Finance today, it's about 6 minutes. He's doing it with an attorney, a brilliant attorney in the crypto arena named Caitlin Long. He says not one negative word about Sam Bankman-Fried. He doesn't mention the Department of Justice investigations. He doesn't mention the fraud allegations. He doesn't mention the 2 to 3 billion or so that they say is missing. Nothing. But he goes in on Eddie Lampert. So that's something interesting to me. I can't figure it out myself. So let me go to Blair really quick. Go ahead. I'm sorry. Go ahead, Adrian.
No, fascinating. Thank you.
Okay. Go ahead, Blair.
Hey, if you would, very, very briefly, for those that may have missed this part of it, because there's a historical reference here that is ringing really, really, really loud. When you talked about Apple, Amazon, Google, in comparison to Enron. So here we are right now watching that same thing happen all over again. That's interesting. Right. So would you just give that little recap on that? Remember they talked about Apple. Go ahead.
I remember. So interesting enough, I got that research from Eddie Lampert. Eddie Lampert did a blog, and he was talking about, this is many years ago, that he discussed in his blog, and I think it's on Medium. You go to Medium or you Google Eddie Lampert blog. He talked about Apple and what people were saying about Apple when they hit a transformation period, right? He talked about what they were saying about Amazon during the dot-com crash. He talked, and I added Enron. And what I did is I made a comparison. If you look at the cover of Wire magazine, and in the cover of Wire magazine, and Mr. Lampert talks about this in his blog, they actually show you the actual apple wrapped in barbed wire, and they tell the shareholders on the cover of the magazine, just pray. And if you look at Amazon, the cover of Barron's magazine, it's a famous cover with a picture of Jeff Bezos, a caricature of Jeff Bezos in a bomb, and it says Amazon.bomb, not com, bomb as in blow up. Enron, the CEO of Enron and the CFO of Enron, Ken Lay and Jeffrey Skillings, they were on the cover of all the major magazines and business magazines at the time. It was being touted as the most incredible company, the best company to work for, if you look under Business Week, and they were running a multi-billion-dollar fraud. So they were bashing Apple during their transformation period because it was a penny stock. They were bashing Amazon during its transformation in the dot-com crash because it was a penny stock, and they were touting and promoting Enron. And in the indictments that came out, and in the congressional hearings on Enron, it came out that they had paid reporters and individual whistleblowers who had discovered they were running the fraud. They had paid them off not to run the articles. Fortune magazine eventually said, we don't want payoffs, we're not going to take payoffs, and they ran an article and basically disclosed the fraud. Jeff Chanos, a famous short seller, was major in disclosing the Enron fraud. But people are paid to do what they call hit pieces on companies that they want the prices to go down. And if you take a look today on Yahoo Finance, November 11, the article they did, the news report Yahoo Finance did, the same clip, and hopefully we can put this in the link of the comment section, Blair, the one that we just embedded, and this particular one. And I'm going to send them to you. They do not say one negative word about Sam Bankman-Fried, but they bash Eddie Lampert. And this guy is under investigation for embezzling and misappropriating, over leveraging multi-billions of dollars, and he's in bankruptcy of Chapter 11, and people don't expect the recovery. There are no assets backing what he has. He's basically taken people's crypto and their keys, and he's thrown them into bankruptcy and listed them as creditors. Not a bad word was said about him. Not a bad word. So that's interesting. So
that's interesting.
And I'll tell you something else. Mr. Lampert has roughly 50-some% of Sears Holdings. I would beg to differ that Sam Bankman-Fried, I bet you he doesn't have billions of dollars of his own money invested where he leveraged everybody else's. And he has major investors and major banks and major people from venture capital firms, so on and so forth. But the same reporter that did this report on Eddie Lampert called him the worst. He'll say he'll go down in history as the worst CEO. How about a person who had access to all these billions of dollars? And he's out of business in less than a few years. And he's accused of improprieties and actual fraud, over leveraging. He didn't say one negative word about it. He was just like an impartial reporter in the report. And we'll put that in the chat so people can take a look and compare the two clips, and you tell me what it is. And we've been out of bankruptcy for 7 days, and we already have the negative people who showed up during the bankruptcy. This guy said it was the highlight of his career, quote, covering the fall of Eddie Lampert and Sears Holdings. I just would remind him to hold on a little bit. And I would wait. I would just wait before I dance on the grave of a man like Eddie Lampert and a great company like Sears Holdings. I would wait a little more than 7 or 8 days post-bankruptcy. And I would just assume that you wouldn't take 10,000 documents to liquidate 750 stores. There's got to be a little more to it. It wouldn't take 4 years to liquidate 700 stores. It's a little more complexity happening here and a little more value. A little more value.
Absolutely. It's just phenomenal to see that, man. It's like you have, there are people that are having the issues, of course, with mainstream media and so on and so forth, not being truthful. But when you see this like this in an area, you would think certain areas would be fine, that it aren't necessarily political, that might be, truthful, but no, like they got it everywhere. Like I'm looking at this, like this is just blatant, what they call vilification. They're just attacking a man's character. I mean, I'm sure
defamation or defamation.
Yes, defamation of character. Yeah, defamation of character.
And it could even be what they call libel per se. But
yes,
I think that we'll get the last laugh when the payout for the bond and the stock comes very soon. And do me a favor, Blair, if you can cue it up. Do me a favor and play that clip one more time.
Yeah, absolutely. It's gross. Hold on one second.
Okay.
Hold on.
Yeah. And I'm gonna have this clip played one more time because I want everybody to pay close attention and let me know if this particular reporter sounds or feels like a person just reporting on a company. Does he seem like he has a personal interest? Do you think he possibly shorted the stock? Could he be possibly being paid by short sellers? He just seems a little too excited and wound up about a company that was around a few years after Emancipation Proclamation, a company that's been around for more than 150 years. He just seems a little too happy at what he thinks is the demise of this company. But when FTX filed bankruptcy today, and I wish we could pull that clip up and just play the first 2 minutes of that. If we played the first 2 minutes of the FTX bankruptcy report, he doesn't seem happy or excited. He seems just as stiff as Tom Brokaw or somebody. But in this particular clip, it's like, and he says it's zombie real estate.
Yeah.
Zombie. And he said we have 20 stores. No, we have closed stores that are going to be redeveloped. We've sold over $700 million worth of real estate. That is documented in document 235T2. Let me say this again. We've sold over $700 million worth of real estate. That's in document 2352. Not sure what page. Play the clip again, Blair. Thank you. Watch this clip again, everybody.
Sears has officially emerged from bankruptcy after more than 10,000 court filings, but not all of its stores are completely gone. The company did shrink from 700 stores to now just about a dozen, but they still live on around the country. It should be no surprise that that's where we find Saz's Take today. Saz.
Brad, this story realistically isn't warranting of our greatness, but I'm going to cover it anyway because I covered Sears and their downfall very extensively. So yes, so after 10,000 court filings, Sears Holdings, the holding company that was created when they originally went into bankruptcy, I believe it was October 2018. That is what emerged from bankruptcy. And a couple finer points here in this story here. The holding company, as I mentioned, is in fact out of bankruptcy. That happened late last week. No, Sears is not going to be opening stores. That's not happening. You'll probably see more stories on the Sears emerging from bankruptcy in the coming days. There's no more stores. It's barely a retailer. No, Kmart is not going to open stores. That is obviously not going to happen as well. So if you have your hopes for these things happening and a great return of a former great retailer, no go. And then lastly, there are about 20 Sears stores left open in the United States, believe it or not. And we have that list here. I think there's one in Anchorage, Alaska. Here's where some of those locations are. But by and large, these 20 locations are, in fact, they're going to close. I believe I just did a search online. The Anchorage location may already be closed.
Oh.
So there might be only 19 stores, Sears stores left open. Now, a lot of the Sears real estate is still out there. It is zombie real estate throughout the country. At some point, these might just be Amazon distribution centers, but for right now, it's just zombie real estate from a former retail icon. And I look at by me in Long Island, there are several former Sears locations, auto centers and Sears, and of course Kmart's that are staying vacant, and the locations are absolutely terrible. And there I am, what looks to be an Incredible Hulk here walking into what?
No, that's not an Incredible Hulk.
Or a zombie.
That's a zombie.
Okay, that's a zombie walking
doing the Thriller dance.
Doing the Thriller dance, walking into a Sears store. I miss going to Sears. I miss covering the story. It's been, it was the highlight of my career covering their downfall, not the highlight of anybody, of course, working there, because it was absolutely dreadful. And I mentioned this in a Yahoo Finance piece in October 2018. That still remains my final piece on Sears. Really, Eddie Lampert, the money manager who combined these companies in 2005, will still go down as probably the worst CEO in the history of corporate America.
One of the last significant plays that even zombie size would know about that Sears was trying to make.
In?
Well, yeah, they are zooming in. That's a gradual zoom too, just to make it an emphasis point.
Wow.
Was the fact that Sears was really trying to sell some of the durable goods, was trying to sell everything from the dishwashers, the refrigerators, and things that don't have a high replenishment rate, which was a very markedly, if I may say, poor strategy if you didn't have enough people, especially in a time in 2018, not everybody was going out and buying homes at the same clip that, not the same clip that they were in 2020, of course, obviously, when there was a more favorable environment rate side. But to have a durable goods play, or to have a play on something that does not have a high replenishment rate, screams deflationary for a company that was already just waiting in uncertainty as well.
Yeah, one of the biggest red flags for me when I was in Alice covering this, Brad, was walking to a Kmart store, and they had registers from 1987. I'll never forget these old school IBM registers. And this came at a time where the new beautiful Target opened down the street with self-checkout lanes. And you had to wonder, why is this happening at Kmart? And you have to go back to Eddie Lampert, never invested in the chain, couldn't care less.
I enjoyed Kmart personally,
really?
Growing up. Yeah,
So
we had a good Kmart in Westchester, Pennsylvania.
We can't talk about this right now.
For many years. It's an LA Fitness now, I believe.
Absolutely coordinated effort between the two of them. Fascinating. Fascinating. Listen, the other clip that you mentioned, I think I got that right here, thanks to Adrian.
Okay, could you just play the first 2 minutes, or first 2 minutes, and you'll just see how he introduces it? Because Caitlin Long, who's, you guys are very familiar with, she's the brilliant attorney who's been working in the crypto space.
Yes.
She talks legitimately about what was wrong structurally and legally. She doesn't make any attack on him personally. She just talks about the business model and how flawed it was, et cetera, et cetera. But I want you to watch, maybe just pull the first 1 to 2 minutes, and you'll see how he introduces it. Absolutely no attack on the guy personally. And this is one of the biggest bankruptcies ever. And nobody sees a chance of recovery, among other fraud, allegations and accounting improprieties, all kinds of things happening. Just play that clip, just the first 2 minutes, to see how different he is with Sam Bankman-Fried, who's under investigation by the Department of Justice and the SEC. This is all public. And Eddie Lampert put up more than $3 billion, loaned more than $3 billion to the company, has more than 50% of the company. He put his money where his mouth is, where in JCPenney, Circuit City, Borders, all these companies, the management was selling off their stock, and most of them sold their stock prior to the bankruptcy. So why do you bash the guy who went all in and kept all those stores open and preserved all those jobs for all those years, when he's as rich as he is? He could have just shut it all down 6-7 years earlier and said, I'm out of here. So I think he should be applauded for putting together the transformation that he put together when nobody else put their money in. So anyway, play this clip and let's see if this guy's like this with everyone, if he's just like this with Eddie Lampert.
Never a dull moment in investing. Let's take a look at crypto prices here. Just moments ago, FTX filed for bankruptcy and announced that Sam Bankman-Fried, the one-time billionaire leader of this company, will resign as CEO in what has been a wild, wild week for crypto. And Brad, you're over at the big board here. And coming into the session, early going, crypto was okay. It was
Yeah.
green. It was in the green. I think you mentioned now you really saw that tick down as soon as that FTX news hit the wires.
Right, and this is about when that took place here. Let me just make sure that we've got the highlighter on handy dandy there and pull this up. BTC USD, this is exactly when that news hit, and you saw the precipitous decline initiate immediately after that, just to stretch it out to a 5-day period here, because this is exactly what Bitcoin has been wading through over the course of this week in concert with many of the other cryptos that have really been evaluating this Binance FTX buyout deal, but was not a deal eventually just a day later. And then the downfall of that was really what emerged from kicking the tires. Binance saying that there were certain pieces of FTX, at least in how they operated, that it said it did not agree with at all. But then additionally here, that really casting a lot of doubt on FTX as a company as a whole. And so as some of that due diligence continued to go and move forward here, Binance, that continued to move lower here. That's down by about 5.25%. We'll call that on the day, but over the past 5 days, down by about 15%. And then additionally, if you're taking a look at some of the other major cryptocurrencies here, you've got Ether, Ethereum, that's down by about 5.5% here over the past day. And then additionally, as we've been taking a look at kind of this 3-day window, because that's when really things have started to move forward. And I just want to put this in equal market perspective there. These are some of the biggest moves that we've seen at the bottom. However, for the broader cryptocurrency landscape, still holding on to some slight gains. It'll be interesting to see if that actually holds up as we move forward from here. But the big news on the day is FTX and this bankruptcy Chapter 11 proceeding that's been kicked off and SBF leaving.
And Brad, I like that fire that Kate Long at Custodia was just bringing here. I like those vibes. Let's get this crap out of the way. Let's get it done and over with. And I hear what she was saying, but you know, in the process of getting this all done, there's going to be a lot of companies hurt in the crypto space. I look at Coinbase shares right now down almost 7% in the pre-market. Checking Hood on the Yahoo Finance platform right now, Robinhood down almost 5% here in the pre-market on that news. Really a bad week for the entire space.
Now, here's the other thing, too. We mentioned Justin Sun earlier. It'll be interesting to see what is necessary there from his due diligence perspective over at Tron. And you're taking a look at Tron, and that's actually down by about 5.2% right now here, too, over the past day.
That's good, Blair. It sounds like a legitimate report about what's happening with a company, even though the CEO is under federal investigation by the SEC, Department of Justice. He's accused of fraud. He's accused of all kinds of things. And he had a tweet.
He didn't mention none of that.
None of it. He just did a regular report. He wasn't smiling. He wasn't giddy. He wasn't calling him the worst CEO and going down as the worst CEO of all time. Nothing. Absolutely nothing personal. He was simply going over the prices and how certain companies are, suffering, et cetera, et cetera. Nothing personal with the CEO. He was talking about the market and what's happening to the market. Now, he could have easily said, in this tough retail environment where people are buying more online, JCPenney closed more than 75% of their stores. Macy's closed more than 30% of their stores. Borders closed all of their stores. Circuit City closed all of their stores. Radio Shack closed all of their stores. Sharper Image had closed all of their stores in their bankruptcy. They have a big online presence, and they have a few stores now. He could have said, he didn't mention the CEOs of these other people. So are these other people horrible CEOs because their companies went under? And let's talk about him not fixing up the stores. You ever been in a Costco? They're warehouses. So the condition of the store has nothing to do with the changing environment in retail. Now, we are opening small format stores that are about 10,000 square feet. That's also listed in document 2352. He said we wouldn't be opening any stores. Kohl's has announced, and you can Google Kohl's opening small format stores. Sears started opening their small format stores in 2017. So I don't get it, but I can tell he sounded like a legitimate finance reporter with no bias. And the second report on FTX's bankruptcy, and he didn't talk about people losing all their money. He didn't talk about the financial fraud, the federal investigations, and everybody can watch that complete video at their own leisure. He never mentions any of that. He simply does a neutral, regular report. But when it comes to Eddie Lampert, 7 days after bankruptcy, they're already attacking him again. And they did mention, like Adrian said, that there were 10,000 documents. And he mentioned that the holding company that exited, As if it's not the same holding company that went into bankruptcy. It's clear he has not looked at any of these documents. I want to say one more thing before we go. Everybody needs to go to document 9987, page 20, paragraphs 11 through 15. That'll be on page 20 and 21. Document 9987, page 20 to 21, and they're talking about the ESL second lien debt claims. These were allowed claims. And when a claim is allowed, you're going to get paid. So that claim is the claim that Eddie Lampert gave to us in the August 31 settlement. That claim is roughly $700 million, and that claim goes to other bondholders and the PBGC on a pro rata basis. That is how I know the bonds are whole. I'm not guessing, I'm not gambling, it's literally in the court documents. The opportunity to buy the bonds with virtually no risk and literally no risk is because the allowed claims are what get paid. You go to document 3276, page 57, they say the allowed ESL unsecured claim, the allowed 507B claim get 91.05% of the net proceeds of general assets. So if the claim is allowed, which it is, that allowed claim was assigned to us. So we get the benefit of that claim. It was either withdrawn or assigned to us. Document 3276, page 57. And if unsecured creditors are getting zero, why would they sign up to get 91.05% of nothing? Just doesn't make any sense. Go ahead, Adrian.
I wanted to just underscore what you were saying about the sort of what appears to be not a biased journalistic perspective, and it just is reminding me of all the things that we've learned from you about value investing and how you have to be astute. And this is just a message I want people to hear. Like, you have to be astute about the information that you take in, and you can't always be trying to be like think like the herd or be influenced by someone's talking in your ear over here or somebody giving their opinion about something, and stick to really the facts and logic. So you're always showing us actual court documents, and bankruptcies are, I guess, governed by court documents. So this is actual reality, as opposed to somebody's opinion or some, infotainment or something that's not actually even journalism anymore. It's supposed to be there for entertainment purposes, but it feels like it's actual financial advice. So I just think that was really crucial how you showed how opinionated and attitude-filled, quote unquote, journalism is these days.
Absolutely. And that's the key. And it's all been one-sided against Eddie Lampert. And even a guy accused of fraud, a guy going into bankruptcy today, multi-billions of dollars, under investigation, all public, people online, angry as hell, can't get their thousands, millions, or hundreds of millions of dollars of crypto. No mention of that. Oh, they're just in bankruptcy. Very calm, very even, no bashing of he's the worst CEO of all time, nothing. By the way, document 1730, page 260 shows the ESL allowed claims. Document 1730, page 260, and the portion that was credit bid, document 2352, page 66. These claims, the credit bid claim was roughly $1.3 billion. That money was recontributed to the company. It's documented. The other second lien claims were given back to us. They are allowed claims, and allowed claims get paid out of the liquidating trust. That's document 3276, page 57. I challenge anybody online, Elephant Analytics, Stephen Baker Law, Wyco Researcher, to produce any court document to refute what I have said in any article and any video. I invite them to join me on a Zoom. I invite them to join me anywhere. So far, in 3 years, Elephant Analytics, Wyco Researcher, Stephen Baker Law, and other people on Seeking Alpha and Reddit have refused to join me on a Zoom to go over these documents to refute them. In 4 years, everything I have documented in my articles is backed up, like Adrian said, by court orders, court documents, and court transcripts. We are not wiped out. We are waiting on payment from the liquidating trust. And you must pay attention to the facts As Adrian said, ignore the stuff online. They are literally not talking about the other 9 to 10 businesses. They're not talking about the small format stores. They're only talking the same conversation they had 4 years before bankruptcy. Go ahead, Rod. I'm sorry. I just saw your hand.
Oh, no problem whatsoever. I just wanted to comment on a question. You know, like, I mean, when I go on my SoFi account, it shows SHLDQ and it states reorg. It's right there. So for those people who keep asking, I mean, on SoFi, it shows SHLDQ dash reorg. And so, you know, like for a lot of people who are new, just jumping in, you've already stated that the bonds will pay out face value plus the back interest. And what is the process for, a lot of people are asking, what's the process going forward? And also, what is a realistic number? I know we've gone over this plenty of times before, but just in case somebody is looking at this particular call, just a rough idea. We know nobody can give a crystal ball accurate number, but just an idea.
Assuming about 55 million or 60 million shares, the cash and the businesses, according to the court record, especially document 2886, read the entire transcript and put the numbers together yourself like I did. Read document 2886. The entire document is publicly available. If you take those assets at the low number and you take the cash from the sale of Innovel Solutions for $1 billion, Die Hard for $200 million, the tax refund for $900 million, the $1.3 billion credit bid, and the cash that was recontributed in document 2352, page 66, and you add in more than $700 million in real estate sales, which were also documented in document 2352, not sure what page, you come to roughly a minimum of $5 billion in cash, and you come to at least another $3 to $5 billion in assets in other businesses and real estate, and you come to, according to the court record, at least $1 billion a year in revenue. So $1 billion a year in revenue with roughly 55, 60 million shares is about $16.70 per share in earnings and a stock price of over $100. That's what I come to with just the court record. So that doesn't mean the stock is going to come out at that price. I can't predict the price like you said, Rod, but if you go through document 2886 and you take notes, you'll come to the same number, especially if you pay attention to the tax refund, which we got. A tax credit is a tax refund. You can Google this yourself, Elephant Analytics on Seeking Alpha, challenge me on this, and I gave a link to the IRS explaining it, and he still denied that it wasn't a fact. So if you go back to my last 2 articles on Seeking Alpha, you'll see that Seeking Alpha is promoting my last 2 articles on Google. They are #1 on the search, on some people's search. So I think they may know something as well. Go ahead, Ron.
No, I was going to say, yeah, you're absolutely correct. It's all over. It's everywhere, your articles. But thanks for, going over that and clarifying that information. Thanks a lot, Eric.
No problem. No problem. So, and a lot of people are asking about time frame. Well, the court order says distributions will begin as soon as reasonably practicable, or something to that effect. Well, at this point, there's no litigation that can stop the distributions. There's no bankruptcy that can stop it because our assets and cash have left the bankruptcy. But what I just want to explain to everyone is you must be patient, and you should not be in a hurry. If you can still get bonds worth $1,000 for $10, $20, and $50, I would just buy as much as I could, because someone is literally selling you a winning lottery ticket worth $1,000, a ticket that has already won, a ticket where the drawing has already occurred. You're betting on a horse that has already won the race. Now, I'm going to give a couple book recommendations. I implore everyone who thinks trading works to go get The Intelligent Investor by Benjamin Graham and study chapters 8 and chapter 20. I implore everyone to get the book Fortune's Formula. I can't remember the author's name. The book Fortune's Formula. I implore everyone to get the book by Robert B. Cialdini called Influence, Science and Practice. But Fortune's Formula is an amazing book about odds, about people who beat casinos, about great value investors. It's called Fortune's Formula. And there's another book called How Not to, I can't remember the book, but it's How Not to Be Wrong with Math. I think his name is Jordan Elderberg or something like that. Incredible book. Read the chapter on the lottery winners. Read the chapter on the lottery winners. The book is called Fortune's Formula. That book is amazing. They talk about some people who beat the Hong Kong racetrack for 10 years straight. So you have to understand that when you can buy a bond not in default, at default prices, it's probably once in a lifetime. When you can pay $10 for a bond worth $1,000 and the money is there to pay, you have to take advantage of these mispricings. Why should you gamble when you can invest with certainty? And that's what value investing is. Value investing is buying something already worth multiples of what you pay the day you buy it. Gambling is buying something in hope for a return later. So that's the key. Sears Holdings has been and continues to be the greatest investment of all time. I don't know of any case, haven't read of any case, where bonds were no longer in default and still selling for pennies on the dollar. So I don't know how long that's going to last, but I hope everybody takes advantage of it. All right, I'm good, Blair.
Absolutely.
All right, Adrian. All right,
Okay.
and I just hope everyone should stay patient. By the way, let me say this real quick, Blair. 7 days after the effective date is not a long time. So normally you want to start looking at things 30 days after the effective date if no announcement or no filings have happened. Keep in mind, everybody, there's a court date next week. There's a court date sometime, I think it's November 17th. So let's be patient. Let's see what's announced in court. Let's see if they disclose what's in the liquidating trust and disclose when the payouts will begin, or if there's a merger announced between, Transform and SRG, LE, or AutoNation, or something to that effect. We have another court date coming on the 17th of November, which is 5 or 6 days away. So let's stay patient. And if you are unsure, make sure you're looking at the facts. Do not pay attention to mainstream financial press talking about brick and mortar retail stores. If they're not talking about the other 8 or 10 businesses, they're probably not giving you accurate information. They're still literally having the same conversation they had 4 years ago prior to bankruptcy. We are completely a different company now, financially and otherwise. So just make sure you're not swayed by this, what people call online is FUD or misinformation. So what? We got 15 brick and mortar retail stores. What about the other 8 to 10 businesses earning more than $1 billion a year in profit? And we still have NOLs. So we don't have taxes for any other foreseeable future. And we have no debt. Look up the March 2020 press release on transformco.com. A company with no debt and no taxes in the foreseeable future and more than $1 billion a year in revenue is an incredible company to be invested in. We don't need large brick and mortar retail stores and an online business doing roughly $2 billion a year. How do you not mention the online business of Sears Holdings? But you mentioned we only have 15 stores. Anyway, I'm done, Blair.
All right. Thank you very much. And everyone, this has been an update regarding SHLDQ and Sears by Eric Moore. And again, we'd like to point you to our Triangle Blockchain Development website for updates just like this one that we'll be going over, and that's the best place to go to get them from right there. And also, we have an incredible presentation done by Adrian about how to buy Sears Bonds. So as we just covered it, it's a great, incredible deal. So it's still going. So if you could go watch her video there, you'll find out how to, take advantage of this situation. It's an incredible situation. And thank you very much, Eric, for your information today and sharing it. And thank you to Adrian, and thank you, Rod, for coming out. All right.
No problem. Doing good, guys.
All right.
All right. All right.
Thanks,
thank
Eric.
you very
Thanks,
much,
Blair.
everyone.
Thanks,
All
Eric.
right.
All right, later. Bye-bye.
Bye.
All right,
All
Kitty,
right.
bye-bye.